Good morning, everybody. Welcome to the game plan. Today is Friday, so happy Friday to you all. So, we're going to get into the nitty gritty. We just got the PCE data out a little while ago. We're going to look at what the markets are doing. What does that data mean? And really, is this market going to continue to rally higher? We'll look at the charts, we'll look at the levels, and I also have other trading levels for us today. All right, so first and foremost, let's go over the PCE data. The PCE data coming in slightly hotter than expected. Hotter means a little bit more inflationary. You can see there at the bottom of the screen, the headline PCE came out in line at 0.1% gain on the month over month, the year at 2.3% gain year over year. But if you remove food and energy, both numbers were hotter, which means, again, if you take out the volatility of oil going up, then oil coming down, all these different things, the inflation is starting to inch higher more than expectations. The month over month core PCE, 0.2% versus everyone thinking it was going to be 0.1%, and 2.7% year over year versus 2.6%. Now, one other number, or two other numbers, I should say, did come out that were a little bit scary for the economy, and they were personal income and spending. Personal income coming in at a minus 0.4%, and expectations were at plus 0.3%. So that's a big difference, folks. And again, that's interesting because, again, that's personal income. So that means people are making less money all of a sudden, and quite a bit less. I mean, this isn't a small miss from the forecast or the expectation number. Personal spending also weaker, which means people are continuing to pull back on their spending, coming in at minus 0.1% versus plus 1.1% expected. So all of this, again, what do you take from it? Well, listen, it doesn't mean the markets have to pay attention. The markets can stay euphoric for a period of time, but slowly the cracks continue to emerge in the ice or the glass or whatever you want to say, and eventually it will shatter. The question is when. Let's take a look at the S&P futures this morning here, folks. We can see that since that data came out, markets are fading. And again, you can see we actually made a high just before the numbers. And then again, when the numbers were reported, we continued to see selling this morning. But we are still net positive. The vibe in the market is buy everything and anything. And so going into this, you can see overnight, this was yesterday's price action in the S&P. Notice again, we opened higher and we just ground higher all day long. Overnight, sideways, and then floating up here into those numbers. So even with this pullback in the futures here into the open of the market at 9:30 a.m. Eastern time, the S&P as of now is still slated to open green. So that's something that we have to keep in mind. Now, it's important to note, and this is important, guys, we are kind of entering this holiday period, right? So next week, today's Friday, next week we have July 4th. Markets are closed on that Friday. I think it's a half day on the Thursday as well. But generally around July 4th, the markets get very light. In addition, today and Monday are the last days of the quarter, and you generally see institutional hedge funds buying stocks into that because they want to do what's called window dressing. Window dressing is they want to make their portfolios, when they send those statements out, those quarterly statements to investors, they want them to be as pretty as possible, aka selling their losers and buying things that have done well for the quarter. And therefore, people, when they get their statement, they're like, oh, they held NVIDIA for the entire quarter, because they don't know when the hedge fund bought it, right? So they're like, oh, they're in NVIDIA? This is great. They must be doing the right things. It's a little shady, but you'll hear the term window dressing all the time, and that's what happens. So end of quarters in an up market tend to stay strong, and we've seen that the last few days. And then once we get into the new quarter, we'll see if those funds say, okay, now that the statements are out to clients, let's unload all of this, or do we continue to see upside? And again, with the holiday next week, it kind of gets a little bit weird as well. All right, back to the charts we go. Let's take a look at the S&P 500 here. The daily S&P, guys, this is that scene of the crime retrace line. We got closer to it yesterday. We still have not gotten into it. Again, the line in the sand is basically 6,200. So we closed at 61.41 today. And again, if we were to go up to 6,200, that would be a retrace to the scene of the crime. Now, just notice that today, right here is the scene of the crime, right? So your daily candle would be here. If Monday we hit it, it's actually around 62.15. If Tuesday, it's 62.30, etc. Because it's upsloping, we have to just make sure we understand that the level I'm giving for today is obviously going to inch higher a little bit on the S&P each day forward until it officially hits it, or if it hits it. And we'll see what happens today, right? We don't know. Now we have those other lines. We have our all-time high line on the S&P, which again, based on where we are trading now, it looks like we'll open right at or just above that all-time high. So that'll be something interesting to watch as well into the rest of the day. Do we close at a new all-time high? Do they want that into quarter end? I could see them wanting, the big players, the institutions wanting that into quarter end. But obviously, let's wait and see and kind of take it step by step. All right, the Nasdaq 100. Here's your Nasdaq 100. If we look at the intraday, you can see again, we closed here yesterday. So overnight, we rallied up. We faded on this PCE income spending data. So hotter inflation and a weaker economy. Again, stagflation, guys. Stagflation is the word that I'm going to be using probably more and more over the coming weeks and months. But even with that, we're still net positive on the QQQ. Daily chart again, scene of the crime retrace is getting closer right here. And remember, we still have our other trend lines as well. We have this one right here, which we broke above yesterday. This was the upper trend line. That, again, is not the retrace to the scene of the crime. It has to be the one you broke. And then we also have our all-time high, which we've also pushed above. So really, this is the last kind of big line in the sand for this market at this time. The dollar today continues to go lower. So again, dollar continues to weaken against global currencies. Again, you have to wonder, number one, we don't have right now, there's relative calm in the Middle East. For the most part, things are looking okay. So then I guess you would say, that makes sense why the dollar is coming in, because there's no need to hold dollars for safe haven kind of safety, if you will. So right now it's coming down. I also think there's other things at work here, like a foreign country slowly diversifying away from the US dollar. They're not doing it fast. They can't do it fast, but slowly I do think that is a process that is and will continue over the coming years. The 10-year yield is up slightly today. We have broken that line. Remember, this was a line I gave you guys about a week ago. We talked about if this line breaks, the 10-year yield likely goes down into this level. Today, again, we're getting a small bounce, but you can see we've come down very nicely. Now, by the way, it is possible for us to see a retrace to the scene of the crime and then that move down. So just keep in mind, it's very normal for markets to do those type of things, kind of check back to that former level. Couple stocks in motion that I'm keeping an eye on. Coinbase. Take a look at Coinbase. I think Coinbase is near a top out short term here. We've pierced this high pivot. We aren't at the all-time highs on Coinbase, but we've pierced this high pivot. And then look at this trend line. This is a great trend line from these lower pivot points we broke below. Here was a retrace to that scene of the crime. We pulled back. Look at the pullback on that, off of that. And here we are one more time into that level. So it'll be interesting to see what Coinbase does. There's been a lot of hype around Coinbase as they go to tokenizing stock trading. We talked about that. And obviously the hype around stable coins. Now, I will say, with looking at crypto overall, if these stocks are to really do well, like Coinbase, you need to see altcoins start to run. And they are not running, not in a significant manner. We have not seen a bull market in altcoins. We saw a big rally around the Trump presidency beginning, but again, I wouldn't call it a bull market in altcoins. Those things are still trading very low on the chart compared to Bitcoin. We'll look at Bitcoin in a little bit. Here's Tesla, guys. Tesla continues to chop inside of a range here. Again, you have your pivot point right here, and you kind of came up. You came kind of close there, and then came down, and here you have your low pivot right down here. Now, I will say this. I almost want to redraw my lines on this now that I'm looking at this chart again, and I want to show you why. Because you almost have an upsloping wedge developing. If you look at this to me looks like a great trend line that gives us a firmer short-term support around 300 on Tesla. In addition, what's kind of interesting here is you could make a case that you almost have from this pivot here a pivot line as well. Look at that. From there right down to this high to there. So you're almost forming a wedge pattern. And remember what wedge patterns are. Wedge patterns are periods where you have a lot of volatility, big moves down and then up, and then smaller move down, smaller move up, smaller move down, up, and down, until eventually breaking one way or the other. And then the idea between a wedge is that whichever way it breaks should be a significant move, right? So again, just something to watch on the Tesla chart. Right now, it's stuck in that choppy consolidation pattern of a wedge, but watch for which way it breaks out. If it breaks out above 350, now you're talking a bigger move. I mean, this thing could go significantly higher, but vice versa. If it breaks below 300, now you're talking about 275 and then potentially 2.25 on the downside. Next chart I wanted to go over is Apple, another wedge. But the amazing thing about Apple's wedge is that it is like coiled like a spring. What do I mean by that? Well, look at how tight of a range we're now in on Apple. So again, if you just connect these highs and these short-term lows, it's coming to a head. Now, what does that mean? It means that at some point here, probably in the next week, Apple is either going to have a major breakout or a major breakdown. And if it breaks down, it's going back to 170. If it breaks out, it probably fills this gap at around 223. So this one would be on alert for a swing trade because, again, whichever way it breaks, you can hop on board and likely get significant directional move on that stock. All right, let's flip over to Bitcoin here and see what we have on Bitcoin today. Bitcoin inching down just a little bit, still respecting this line that it re-established itself above. We know our levels, though, at this point, right? So our level of on the upside's just below 110,000. That's only, I would classify that as minor resistance. Why? Well, because it only goes back to May, right? So the shorter term trend lines, you have minor resistance. If it breaks through that, major resistance around 113,000. If it breaks back below, you still have support around 100,000, and then the big level here between 95 and 93,000. But again, one thing to take note of here is that the stock market is at all-time highs. Bitcoin is not. Doesn't mean it can't play catch-up, but these are little signals that I just pay attention to in terms of risk on versus risk off. If altcoins were running crazy and Bitcoin was making new all-time highs, it's more of a market where there's a lot of acceptance of risk. The fact that Bitcoin and altcoins are still stalling makes me think that the market, the stock market, will eventually turn significantly lower here because it's telling us what the psychology of the underlying bigger investors are. Okay, gold today is getting hammered. Take a look at this, guys. Remember our long-term trend line here, which again, let's remove this for now. I'll put it back in a second. But this is your long-term trend line. Beautiful long-term trend line. If, again, this breaks and confirms, this opens the door not only to a move down to 3130, give or take, but even what I think could be a break of 3,000 on gold to the downside. Now, you guys know I am a huge long-term bull on gold. Like, I still think it's going to $5,000 an ounce, even higher down the line. Because, again, our government is never going to stop printing money, unfortunately, until they're forced to. And then basically that means until things get so bad that they're forced to. And, the Federal Reserve is going to go back to its old playbook. As soon as the economy struggles, they're going to cut rates and, again, essentially buy assets, pushing more money, or buy treasuries, pushing more money into the system. It's unfortunate, but that's just the way that these big economies have been programmed to solve problems by printing, right? And so longer term, I love gold. But the beauty of it is you can get opportunities to buy gold on the relative cheap if it comes down enough. And that's what I'm seeing here in potentially if gold can break here and we get down to like this 3,000 pierce right down here. I think that's where you start to say, okay, now is the time to start buying into gold for that longer term play again. Now, listen, it may not go there. I still hold gold myself as a longer term investment, but I would be a buyer. Anything below 3,000, I'll be looking to add to my positions. But very interesting to see the trend from December is now looking like it may be breaking on gold. All right, speaking of which, guys, if we look at platinum, Platinum, again, had a huge rally over the last month or so. Monster move up. It is having a correction. If you're in my smart money commodity service, and just a heads up, in that service, I trade ETFs. So a lot of people are like, oh, I don't trade futures. I can't trade this. I can't trade that. I trade ETFs. So everyone can trade that. But we shorted Platinum yesterday. I got the sell signal yesterday, already up like 6%, 7% on this trade. That's a beautiful one right there. And then Palladium, we had a long, we took profits on that. It did pop yesterday and earlier today in the overnight, but is now coming back in. But very nice there as well. And then just we'll go back to oil. But yesterday I picked up Boyle. Boyle is a leveraged ETF, long nat gas. I already exited with commodity members this morning for 11% gain. Very, very cool, guys. So again, all these down days in a row, right into this technical level here. I still think it's going to go lower, but for me, it was just like, all right, let's play this quick trade, which is kind of what I'm doing with oil as well. I'm still in my oil trade. If we flip over to oil, we can see again, oil is creeping up off of this technical level. I'm not looking for oil to go back here. I'm just literally looking for a bounce back around here. I'll grab my money and run and then wait for the next setup there. Speaking of grabbing money, guys, again, just be aware that the Winning Trader series and all our courses are still on sale, but only for a few more days. And again, these courses, when you take the Winning Trader series, it literally, I have people that say, hey, it not just changed my financial future, but the things that are taught in there changed my mind to being more analytical and logical, and I make better decisions in life as well. And it's very cool that that happens, and it does happen. Ask my wife, which she doesn't always like because I'm not as emotional, right? You know, I'm very much like, well, this is the chart, or this is the life, and this is the way we have to do it. This is just very matter of fact. But especially in investing, it really makes you a trader that plays probabilities. And that's the essence of it, right? You're playing probabilities and you're putting the odds in your favor. So again, just a couple days left on the Winning Trader series. We also have the overnight hold, the VWAP course, the wedge pattern course, the 1 minute scalpel. These are amazing courses, guys, and they're 50+% off. That again is slated to end on Sunday. So if you're going to pick it up, don't let it go by and have those prices double on you. If you're interested. All right, guys. On that note, I am going to bid you farewell. But as always, folks, you guys are near and dear to my heart. I hope that even if you don't buy any of our courses, that these free game plans enlighten you a little bit and help you achieve at least some sort of financial improvement. And that's really what it comes down to. Let's just always improve. That's what my VI mantra is about, verified investing. The goal is to have retail investors finally step up to the plate of not acting emotionally, buying at highs, panicking and dumping at lows, but start looking at that chart. See what the real essence, what is the probability telling you? Because I'll almost guarantee that when we sell at the lows, almost always it's the wrong decision, just like when we buy at all-time highs. It oftentimes looks good initially, and then it's like, oh, crap. I got lured in again because I felt that FOMO, and it messed me up. All right, you guys have a good one. Thanks so much. Go have a happy Friday and a weekend. I'll talk to you soon. Take care.